For signs, every fake breakout has them. Stay until the full entry sequence at the end. Both chart scenarios build on each other. Skip any part and the setup will not click. Watch all the way through. Here we go. Clean uptrend. Zigzag structure throughout. But resistance is forming. 3 rejections at the exact same level. Sign 3. 3 equal highs at 109.5. Every trader who sees this places their stop just above. Stops are stacked there. Sign 4. This uptrend is stalling. Candles are getting smaller near resistance. No structural push behind this move. Now the breakout candle fires. Sign 1. Volume explodes. Highest on the chart. But look at the body. Sign 2. The wick reached 112.5. Body closed at 109. Right back inside the range. High volume. No follow-through. All 4 signs confirmed at the same time. Big confirmation candle closes hard below the fake out open. Now watch carefully. A small green candle drifts back up into the fake out area. Low volume. Very low. That is the retest. No conviction from buyers. Weak pullback. The bearish entry candle forms at the retest. Break of that candle's low confirms the short entry. Stop above the retest candle high. Tight. That is the full framework. Same 4 signs. Now watch them appear in a ranging market. Bullish fake out below support. Different structure. Different candle character. Same sequence. Ranging market. Wide candles. Choppy. No trend. But support is holding. 3 separate touches at the exact same level. Sign 3. 3 equal lows at 103.8. Sell stops are stacked below every single one. Concentrated liquidity right below support. Sign 4. This is a ranging market. No trend. No structural reason to break lower. Then the breakdown candle fires. Sign 1. Massive volume. Biggest on the chart. But watch the body. Sign 2. The wick reached 101.2. The body closed at 104.8. Back above support. High volume. No follow-through. All 4 signs confirmed. Big bull confirmation candle closes strong above the fake out open. Now watch carefully. A small red candle drifts back down. Very low volume. That is the retest. Sellers have no conviction. Weak pullback. The bullish entry candle forms at the retest zone. Break of that candle's high confirms the long entry. Stop below the retest candle low. Same principle. Opposite direction. The full checklist. Sign 1. Volume spikes on a breakout, but there is no follow-through. The volume is the fuel. If price does not move with it, the fuel was absorbed. Sign 2. The wick crosses the level. The body closes back inside. The wick shows where price was pushed. The body shows where price accepted. Body back inside means the level rejected. Sign 3. 3 equal highs or lows existed at the level. 3 touches mean stops are concentrated there. That is the liquidity target. Sign 4. No context for the breakout. Ranging conditions or a counter-trend push with no momentum behind it. Entry sequence. After the confirmation candle, wait for the low volume retest. When the entry candle forms at the retest zone, the break of its low confirms the short. The break of its high confirms the long. Stop beyond the retest candle. For context rules. 1. Only trade fakeout setups at major supply or demand zones. A fakeout at a random level in the middle of a range is average at best. At a weekly supply zone or a major order block, the probability increases significantly. 2. Confluence multiplies the edge. Fakeout plus order block plus weekly level is a high probability combination. 3. These setups have a 60 to 65% win rate. That means they fail 35% of the time. Accept that before entering. 4. Always manage your reward to risk. A 60% win rate with a 1-to-1 RTR still loses money over time. Minimum 2-to-1, ideally 3-to-1. The win rate gives you the edge. The RTR makes the edge profitable. Subscribe for more. Every trap, every entry broken down exactly like this.